Okay, so representing Group 3, we will be presenting about the Vadodara Halol Toll Road case study. They have formed a special purpose vehicle called Vadodara Halol Toll Road Company Limited, and it was actually promoted by the government of Gujarat and IL&FS. And the main aim was to, there is an NH8 there and a two-lane road which is connecting there. And the main aim was to widen, strengthen and operate the 31.7 kilometer state highway. And this is actually a flagship project under their vision called Vision 2010. They had some projects to be completed before 2010, and it was a master plan by the government of Gujarat, and the modality they adapted is the boot. And why they selected Halol is that there are some districts, which is called Panchmal districts, near to the Halol city, and the main purpose which is going Panchmal district is that they are having some tax incentives and maybe tax exemptions to promote the industrial growth there. So if they have this road or something there connecting or promoting the trade and exports and everything, they expected that the projected industrial growth would be higher in that area. Of course, that was the aim of the whole project. And this road is also actually is an alternate road which actually exempt the congested area of Ahmedabad, and it is also like 50 kilometers shorter than the current NH. And the contractors were Punj Lloyd and Ircon International. Considering the total cost, they had completed the project within the time and within the budget also. And it was actually completed like 4 months ahead of the scheduled time. And it got some recognition by the World Bank as the best practice for the risk mitigation strategies and social rehabilitation procedures that they have adapted. Okay, and instead of all these things, the toll revenue that they projected and what they got was very low. And this has led to a toll review committee formation which otherwise would have forced the VSTRL or the SPV to shut the operations by 2003 itself. Like the reasons for this toll review are, the projected growth of industrial rate which was done by the VSTRL was very much higher than what they actually got. And once this construction was going there, they had actually put out the tax indices that were already given to the Panchmahal district. So the industrial revenue was also low there. And while entering to in the Gujarat Madhya Pradesh border area, they had this penalty for truck overloading and this hectic computerized checkpost, which actually force the truck drivers to take a route through the Madhya Pradesh and get into Gujarat at some other point. And since the construction of some other part like Halol-Godrej segment was also going on, there were traffic diversions, like they didn't want to go into that hectic area. And the project also consisted of construction of some services road on both sides of its main NH. And the vehicles, instead of giving not for giving the tolls and all, they actually took these service roads, and even though it's a longer road, they actually preferred it and to get into their destinations. So they had their review meeting by 2002, and these were the outcomes of the toll revenue. They had actually formed a committee called Toll Revenue Committee, and what the VSTRL has proposed was that they will increase the toll rates of the MAV or multi-axle vehicles like 3, 4, 5 axle vehicles, they would increase. But the TRC committee had some concerns like that it was only constituting the 17% of the earnings from that whole project. So they had asked the TRC to actually go through it and give some survey or data to actually validate that what you are doing is right. So they demanded the OD data, means origin and destination data, and also the traffic leakage probably, like I said, they took the service roads to actually escape from this route. So all these probabilities they had asked to give, but what they have done is that it was difficult to get the data, so they actually examined another bridge, the toll on another bridge called Narmada Bridge at, okay, it's not Narmada Bride, it's Narmada Bridge at Bharuch, which was actually constructed during the same time. What they did was that they had actually done the survey for just 1 day. So the sample size was actually very low, and the TRC was actually not very much happy with that. And as per the data they are given, they had actually proposed an increase in toll for the 3rd, 4th and 5th axle vehicles, 5 axle vehicles, and it was like 40, 80 and 120, which was a significant increase in the toll revenue. And the revenue additionality was between 7 million to rupees 10 million. and this was actually very less compared to the Narmada Bridge revenue, which was what they earned. And going through it was something that they should have done is that they should have understood the market dynamics. Like they were too optimistic about the industrial growth that they would happen there, which didn't happen, and they had actually taken out the incentive for the industrial growth, so that had actually literally damaged the project. And like they did the survey only for one day, which didn't include the whole sample size of the whole system. And they actually didn't go for a competitive building, which would have opened the door for some expertise in the economical field. They had just gone for a SPV. And yeah, if shadow tolling could have been attempted, it was a possibility, but it should be checked whether it would be okay or not.
Okay, so this is, I'm not sure if this was in the case, but this is generally a picture of how, what the project looks like. Okay, so we have, as we spoke about when we talked about project finance, we have a special purpose vehicle called the Vadodara Halol Toll Road Limited. This is a joint venture created specifically for this project. I think there's ILFS, Government of Gujarat, there are 2-3 people, they've combined. They formed a special purpose vehicle, and this has essentially project financed the project. So if you recall, this entity, ILFS, etc., have put in a little bit of equity. It has borrowed some money, and the borrowers can only go after VHTRL. They can't go after ILFS or Government of Gujarat or whatever, right? So these guys have a loan agreement. So this is the debt part, right? So this says debt here. This is the debt part. They also put in some money themselves, right? So this is the equity part, right? And then essentially they go to Government of Gujarat to sign a concession agreement, which is this part here. Government of Gujarat says, okay, you build, own, operate this tollway for a period of time. What is it? 25 years, 30 years? What was the 30 years, right, which means you have about 2 or 3 years of construction and then 27 years of operation, and within which period you can collect toll, and at the end of those 30 years you transfer the project back to me. So very traditional, you can call it BOT, BOOT, whatever, same build, operate, transfer model. Since these guys are not a construction company, since they are a developer, right, they actually then have to get the road constructed, which means they go to a construction contractor and say, I'll give you a certain amount of money, build the road. So this money that they are putting into the company, the debt that they are borrowing, part of that goes to the construction contractor, right, to get the road built. Of course, they'll recover that money through tolls later. Similarly, they are also not experts in operations and maintenance. They are developers, in the sense they are good at taking risk, good at bringing money together, etc. So they have somebody else who's doing the O&M, which means this person could do anything from, maybe they man the toll booths, right, so make sure that the tolls are collected, money is remitted in the bank, etc. They might also be doing the periodic maintenance. We talked about preventive maintenance, all of that, right. So it's a very standardized arrangement, okay. But as the project goes forward, what do we find, right? What was the level of demand as a percentage of expected demand, right? It's about 30 odd %, right? In other words, it's about a third, right? So you expected that demand would be X, and the demand is 1/3 of X, right? It's not 90%, it's not 80%, it's literally 30, 35, whatever %, right? And they came up with a number of reasons, right? They said there's economic recession. Okay, that was one of the reasons why there's some sales tax incentive that was withdrawn. So therefore, that area was no longer such an up and coming area. So people went elsewhere. People talked about, I like the truck overloading argument. People at the Gujarat border are actually doing the right thing. They are checking for overweight trucks and penalizing them, and therefore people decide to go through Madhya Pradesh, right? And therefore, not enough traffic on this poor road because some fellow is actually doing his job. Okay, so you have those kinds of answers, etc. So there are a number of reasons, right? Somebody says there's a service lane, traffic is leaking on that service lane, all of that, okay. So for whatever reason, we end up with a figure of 37%, okay. So now, couple of questions. First question is, what should we do? Okay, at this point in time, I am running a road, I have to pay these guys back money, right? These guys have all given me money, okay, I've got to pay them back. Okay, and I've got to pay them back based on the revenue that I get. I'm not getting enough revenue. These guys are banging on my door saying, where's my repayment? So what can I do? Increase toll revenues. How do I increase toll revenues? So what should I do? Give me an action. Right, so one strategy is, let me increase toll. Okay, so again, so there are two conflicting, so this is the traditional conflicting things. So if I want more revenue, I increase toll. But if I increase toll, there might be less willingness to pay, which means I might have more vehicles going on the service roads or more vehicles going on alternative Right. So, okay. So, let's say okay, tolls is a strategy, right? Whether it will work or not is a different issue, but it is a strategy. So, then you control leakage. Okay. So, we will figure out how to do it, we will use technology, but the point is you don't have service roads are useful, because obviously if equipment breaks down, cars break down, etc., it's good to have a service lane, and it's good for a pickup vehicle to come. But again, and this is where highways in India are designed a little bit differently from highways in other parts of the world. If you go to the US, for instance, all highways are access controlled. You can't enter a highway except from an entry ramp, right? So, there are these entry and exit ramps, maybe roughly 1 mile apart, and you exit and enter, right? Indian highways are not like that. Entry and exit is porous. You can enter literally any, because you're wheeling it through all kinds of wayside villages that existed, right? And therefore, there is no really, so you're a villager now living on the side of the road, you can actually enter the highway straight, right? So, but one thing is, let's go to that model, let's build barriers, let's build exits, let's sort of control the leakage on the service roads. Fine, it's a strategy, whether it works or not, right? Let's just sort of throw out ideas, right? So, that's one idea. Again, whether it will work, whether it won't, we don't know. Okay, what else? So, we've got, I'll increase tolls, may or may not work. I'll control the leakage, may or may not work. Okay, bring back the tax incentive. Okay, again, I mean, it's a suggestion. So, bring back the tax incentive. So, you incentivize traffic on the road. You have a response to that? Till more different point. Okay, so anybody has a response to this point? Otherwise, I'll sort of come in a second. But again, that could work, but the government might say, why am I giving a tax incentive? I gave a tax incentive to develop this area. I feel that this area is now developed. Certain number of factories have set up, certain number of jobs have been created. Why am I losing money? Right, continuing to lose money by giving the tax incentive essentially means the government is losing money. Taxes that could come into the government are not coming in. You're saying okay, because that will keep costs down and others can prosper. Right. So, again, it may or may not be defensible. Let's sort of go around. We'll come there. We'll go Parthik first, then Harsh, and then we'll go that side. Okay. Increase concession time period. Increase the time. So, yeah. So, you spoke about marketing. So, I'll put that in, and we'll sort of discuss that in a second. Harsh, your point. Okay. Increase length. So, now here there is a cost and benefit to it, right? So, as it is, you are bleeding. And to increase, you are actually going to have to spend extra capital cost. You're going to have to spend, I don't know what it is these days, 10 crores a kilometer or whatever the construction costs are, right? So, the question is, in order, I can see the logic of maybe if it was a larger road, there'd be more people coming in, but you would actually have to spend more money, right? And you might now, instead of having sort of a debt of 200 crores on your books, you might end up with an unserviceable debt of 400 crores on your books. So, we don't know how that works, right? The marketing thing is also important, because essentially it says, look, how do I incentivize people to come to this road, right? What characteristics of this road can I highlight? The smoothness, travel time, this, that, or is it, they're talking about some proximity to Mount Abu, or something like that, right, on this road. So, you actually say you buy a toll ticket, it also guarantees you, for instance, admission into Mount Abu, right? And so, therefore, you now start funneling tourist traffic through this road, etc. Okay, all right, what else? Somebody here had a, Sri Anand, you had a point? Yeah, same, okay, same point, okay. All right, financial restructuring, okay, financial restructuring. So, what does that mean? Okay, so, and this is again something that companies do all the time, right, because interest rates keep changing, right. So, you are always on the lookout from, I used to borrow at 14%, today somebody is giving me at 13.5%, and then I can easily restructure. Essentially, I say, look, I owe you 100 crores, right, at 14%, okay, let me go to this guy, borrow 100 crores, pay you back. Now, instead of owing you, I owe this person, but this person wants only 13.5%, right. So, I can restructure my loans in a variety of ways. So, yeah, I can restructure my loans and restructure the tenure. So, all of these are good ideas. Okay, bailout, that's always there. That's our favorite go-to, right. I made a mistake, right, because I was greedy, now you bail me out. Okay, because I'm sure if these guys had made more revenue than expected, there would have been no talk of let me share the extra profits with you, right. But the losses I would always like to share, right. So, that's fine. I mean, it is a strategy. We often sort of talk about bailout, right, saying, look, you can always threaten by saying, look, if you don't bail me out, I'll have no option but to declare insolvency or bankruptcy and walk away, in which case who will operate the road, right, who will take care of the millions of travelers who want to travel through that road, and therefore, to not to not make it difficult for people, right, to not encumber people, can you bail me out? right, is sort of an argument. Okay, so we've got a bunch of arguments. We've got increase tolls, we've got control the leakage somehow, bring back the tax incentive, increase the contract duration, market it better, right, increase the length of the road, maybe works, may not, restructure financially different interest rates, bailout. Okay, so this is the classical marketing tactic of give samples for free, right, and that's exactly the idea, right. Here are a few free samples, right, it's free, so you get hooked onto it, and then if you get hooked onto it and you really like it, etc. So that's, you know, that's a marketing strategy, right. So your marketing could be advertising, could be, you know, pricing, you know, maybe it's sort of like Uber does surge pricing or whatever, you have differential pricing. So when the highway, you know, is not very busy, do you have like a discount for using it, all of those kinds of things. It's all variants of marketing. You can be as creative as possible. Okay, now here's the thing. Okay, yeah, here's the thing. Let me open up my Excel sheet. Okay, I encouraged you guys to do it. I don't know how many of you did, but there's actually data in this case, right? So you can run this through Excel. Okay, so this is okay, this is the original, right? This is the original. These are the number of vehicles that are going in. This is the rate, all of that, right? This is the revenue. It comes to about what is this, 164 crores or whatever, right? So the thing is, I think you had borrowed about 360 crores. I mean, essentially you needed to sort of make 360 crores on the project, even assuming that about 20% of that was your expected profit. You know, there's at least 300 crores of cost in that project, and you're only making 160 odd, which means you're 140 crores short of a minimum break even. Okay, so what do we want to do? We want to increase toll rates, right? We'll assume people are willing to pay, okay, which they may not. So, but optimistically we increase toll rates. So I go from 5, 10, 30, whatever. The multi-axial vehicles are now, because that's where you want to really increase, right? So instead of 85, 105, 125, 145, we go to 125, 185, 240. So this is like 50% increase, right? 50% increase. Okay, just imagine, right? Unprecedented. Nobody goes and hikes toll rates by 50%, right? How would you guys feel if next year your, well, some of you might be graduating, but next year if your fee was 50% higher, right? It's ridiculous. Nobody does that, but let's do that. Right, and we come from 164 crores to about 179 crores, right. So we've added about 15 crores. So all this talk about toll restructuring, multi-axle vehicles, 3-axle vehicles, they're not paying enough, etc. Stick them with a whammy, right, 50% increase, all you get is another 15 crores, all right. Oh, service road. Okay, so let's curb service road leakage. You know what, I want to curb 100% of service road leakage, right? I don't even want to let one vehicle in that service road go without paying, right? So I've got the numbers, I've got the leakages, right? Service road's small, right? So obviously my big vehicles cannot fit onto the service road. They're not going on the service road. My little motorbike and all of that is going on the service road, right? So I get every one of them and I make a grand total of 87,000 rupees. Right, I have say essentially the service road I have lost 87,000 rupees, is what I'm crying about. Okay, literally that's money that individuals can put into that project, right, and that's your big service road leakage. Okay, okay, so we say marketing, right? What is marketing going to get me? Marketing is going to get me more trucks. Okay, so I'm going to have these again. Look at these are my revised rates, 125, 185. Not only am I going to stick revised rates in, look at what I'm doing here. I'm going to increase by 50%. Right, look at the formula here on the top. I'm going to just assume that I market so well that there's a 50% increase, right? That instead of what is this, 10 lakh trucks, magically I make 15 lakh trucks appear, right? Magically I make another whatever lakh of MAVs appear, right? I'm just going to manufacture these trucks and put. I'm going to be so good at marketing, right? And I've revised my rates. I put all of it together. I end up at about 229 crores. And then what is this? This is. So I think I've done all kinds of things here. I have assumed all kinds of increase in demand. I've increased toll all over. Now these are I've even doubled, right? My multi-axial way. Well, the 6 axles and all are about the same, but I've increased 2-axle, 3-axle. I've sort of doubled charges. I've done everything I humanly can, right? I've plugged service road. I've doubled the number of trucks on my road. I've doubled the charge, or I've increased the number of trucks on my road by 50%. I've doubled my toll rates with scant regard to whether anybody will pay or not, right? And after all of that, right, and I put in my 87,000 rupees because I don't want to miss out on what I lost on the service road. After all of that, I still end up at 291 crores, right? Still, after doing everything that not even God can do, okay, I still end up much below my 300, right, which is much below my 360 crores. right? 360 crores I think was my overall cost of capital. I end up at 291. Okay. So in other words, if I do everything here, and I think somewhere, okay, so I also did a restructuring to 13% interest rate, and I found out that gained you about 20 million. Right, so that's another 20. So you can add 229, you can add 249, assuming that somebody can slash a whole percentage of multiple percentages out. So all of this, right? So the point is, if I do everything together, right? I increase tolls, right? I control the leakage, I market better, right? I financially restructure, right? I do all of that. I still don't get close to my 360. Okay, so what's going on here? Sure, but those are all small. No, see, 5 rupees to 10 rupees, what am I going to get? Okay, what do you want me to do? Multiply, double this? Okay. We can do what we want. I'm still not getting 360. Okay, buses. Let's catch the poor buses. Ah, finally. Right? So essentially, I have to like really. And the question is, are people going to, is a bus going to pay 180 rupees to go on that road? Right? These are public buses, by the way. Right? So, yeah, I mean, I can start making more and more unreasonable assumptions. Right? I can get that number. At some point, I can take this whole column and sort of put an extra zero onto it, and clearly I'll be highly profitable. Right? So, I mean, I'm trying to limit myself from madness. Right? I'm trying to sort of get to a point where I do something that is outrageous. And still show that we're still not in that 360 ballpark. And to really get to 360, I think you have to essentially border on madness to get there, right? So essentially, the point is, yes, you can do a bunch of things, but even that doesn't seem to be working, which leads me to question the initial assumption. Was this ever a feasible project, right? Because like these guys are saying, I thought your service road would not leak. Because it's leaking, the project is not feasible, right? I thought you would be able to charge more for your multi-axle vehicles because you're not able to but if I did everything that you would reasonably thought about, my project is still not feasible, right? Which means, did you sell me a lemon, right, at the start of the project, right? So you go back and you look at those readings and all of that, and you say, right, so the consultant, right, it's a firm called, Kirloskar, are they displaying an economic hitman kind of mentality, right? Are they trying to sucker me into a project, right, for some reason? And again, this is a big, there are two types of challenges associated with consultants, right? One is when you bring in consultants for preliminary design, right, and ask them to sort of see whether the project is feasible or not. Very often it's in their interest to show that the project is feasible, because then they often get a detailed contract, right, a detailed design contract. That's one kind of dynamic that works. The other is sometimes you have consultants who work on a success fee model. Success fee model is to say, I want to bring you in. If the PPP is really successful and is awarded to a private operator, I'll pay you your money. If the PPP is not successful, I'll pay you some 10%, right? Because I want you to do a really good job of trying to see if you can test all the assumptions. Of course, this works in the other direction, where I say, look, if I don't make this PPP successful, I won't get paid, right? So let me put in all kinds of assumptions and show you that the project is successful, because that's when I get paid. And the moment I'm paid, I'm only a consultant. I'm not building, I'm not operating, I will leave, right? So there are sometimes the way you select consultants, right, leads to, and this is, I mean, you can, is this, any of those explanations might fit. Is this economic hitman mentality? Have these guys done strategic misrepresentation, right, in order to, to actually make sure that the project goes ahead? Was there an optimism bias, right? Did people just delude themselves into thinking that there will be superb traffic because, India shining, 10% economic growth, right? You never know, right? But the point is, all of these have contributed to getting to a situation where you have a completely unreasonable project, which now has been constructed. The 300 crores are spent, right? And now you're stuck, right? Somebody is stuck, right? Either you make these breakthrough political decisions and then you might scare everyone away from the road, right? Or the lender essentially says, I have what we call a non-performing asset, right? I lent money to this project, it was a bad deal. I'm not going to get that money back. I have to write it off my books, right? So I have something called a non-performing asset, Right? If you go read the newspaper today or you go and look at the internet, it will tell you that banks are writing out a ton of non-performing assets. Many of them are road PPPs, right? Because of stories similar to this. Okay. All right. So these are all potential strategies. Okay. Anyway, yeah, cameras on service roads. Okay. Anyway, so yeah, so the point behind all of this is that there are economic risks on these projects that are tied to whether you will get the costs that you had, or whether you will be able to meet the initial costs that you had committed to. In this case, they don't seem to have had a time or cost overrun. They seem to have built it on time and of money. But the second big economic risk is, will people buy the service that you are actually offering? And that depends on how many people actually value that service at what price, right? You might actually find that there are fewer people than you thought, right? Or you might find that there are the right number of people that you thought, but all of them are not willing to pay, right? Either way, you have a problem with regards to demand, right? Some of it might be because obviously I can't go to every single person who might ever use the road in the next 30 years and ask them if they would be willing to pay. Obviously, there are assumptions that are being made, right? So some of it is just human error. But some of it is possibly a little bit of deliberate massaging, and this is where we really need to be careful. So how many days was the survey done, origin destination survey? 1 day. Okay, we don't even know how long for that day it was done, right? How representative was that day, right? Was it done during Diwali, right, when everyone stayed at home, right? Was it done during some sort of one particular day where other roads were blocked and there was so much traffic on this road, right? What was the characteristic of that day? You don't know. Right? And so these are some of the assumptions that you need to look to. So somebody was asking, right? So you are asking, how do I tell whether there's an economic hitman here or not? The methodology is important, right? So you've come with some numbers to me, right? You've come with a certain rate of interest. On what basis? You've come with a certain traffic projection and growth. On what basis? Right? How many days did you do your survey? Right? Did you stagger different times? Did you do it at different locations? What was the level of rigor on which you have? Can I, just for the data part alone, can I hire another consultant as well to validate what the data is? Right? So I think these are the kinds of steps that one might need to take to ensure that your data is clean. Once your data is clean, the rest of it is simple. Right? Figuring out what the concession period should be, what your rate of return is, that's just Excel does that for you automatically. Right, but the data is important, and a large part of it is variable. Right, over 30 years, all kinds of uncertainties might happen. But there is also the fact that we may not have spent as much time as we should. People might have vested interests to get this project going. All kinds. There are projects, for instance, where people purposefully bid, knowing that they will make a loss because it goes on their CV. And next project, when they ask for a pre-qualification and they say you need to have done 1 or 2 of these projects to bid, these guys can show that project and enter the bid. So they will lose a small amount of money on one project in order to gain on other projects. So these are strategies that firms do employ, right? So how do we really, from a project perspective, how do we catch them is the question. Okay, so that's sort of big brief of demand risk. Let's take a couple of questions, Chinmay first and then Tilman, and then we'll close up. Sure, they should have studied about these other projects and their toll rates. They probably should have had more rational toll rates. But the point is, even if they did, right, they probably wouldn't have salvaged the project. So they think there was fundamentally something wrong about the demand estimate here, right? The demand, the numbers that actually came out do not justify the expenditure, right? This was probably not going to be the perfect PPP project. Okay, so there was something about those numbers where I think these guys went wrong at the beginning. It could also have been that the consultant was not given enough time, right? So maybe they were given about 2 weeks and said come up with a feasibility report, at which point you have only 1 day to do a traffic survey, right? So it may not necessarily have been the consultant's deviousness. It might just have been, and that happens as well. Clients want to sort of cut the ribbon quickly, say I have budgetary allocation now, let me start construction, 15 days or 1 month for a consulting report, right? So may not be the consultant, but that's the point, is somehow, right, somewhere the right data was not presented on the project, right? And as a result of which, irrespective, yes, they could have done that a bit better, right? They could have rationalized toll rates, but it wouldn't have saved the project, right? Given the numbers that they saw. No, it's essentially, see, the consultant has given a report, right? That is a recommendation, okay, based on which you have acted, you've enacted the project. The only liability is that the company has to pay the bank. They've borrowed money from the bank, right, and they have to repay that amount. Okay, so therefore they are liable to repay the bank, but because it's a special purpose vehicle, if they sort of are insolvent and run away, the bank is stuck with the liability, right? And therefore it was also the bank's responsibility to re-verify these numbers and make sure that they are lending to an accurate project. And again, perhaps the bank also did not do a thorough enough job of validating the numbers. You mean in the TRC? In this particular case, probably not. Although, yeah. But so again, this is where the so what is happening is these guys here who are putting in equity, right, are losing all their equity. Right. So essentially I put in my money. So the bank obviously is not going to allow you to use the tolls to pay dividends to your shareholders, not pay the buy. So the debt comes first, right. So you lose your equity as well, right. So that's a haircut you go. So perhaps it's incorrect to say that the banks are the only ones who are losing. The equity holders have also lost whatever equity they've put in, right, and therefore it's your problem. So essentially these guys say, look, why am I running? I mean, I'm a loss-making company, right. I'm running the road, right, but I'm a loss-making company, so I can declare myself bankrupt. Right, and therefore if I declare myself bankrupt, then somebody else has to take up the road, right. So that's the eventuality, right, because they continue to run into losses, because where are they going to get money to pay the banks? At some point they'll have to default on the loan, at which point the bank might need to come over and take over the asset, right, and so perhaps the bank can find somebody else who can run it, so that whatever little amount of revenue comes in, they at least get that for the next 30 years, and the rest of it they write off. All right, so there are sort of complicated calculations, but yeah, the bank needs to do its diligence, right, and the bank can insist that they should also have a representative on the toll review committee. They must have a representative on the board of the company, right. Companies have governance boards, right, so a board of directors, whatever. So maybe there should be an independent director from the bank. So the banks need to also figure out how. Now again, this is one of India's early PPPs, right. So this was done at a time where maybe we didn't recognize that all of these complexities would happen. Today the landscape is very, very different. Banks do completely different diligence. We have consultants who are much more skilled. We have all kinds of committees. Not that projects don't run into trouble, they do, but we certainly have evolved from a structuring perspective.